This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, traders. I'm Daryl Richburg, and this is your Forex route for March 29th, 2007. The market was very quiet today as most majors were confined to tight ranges. This is not typical these days, and it could simply be the lack of direction in the last week or so that has traders sidelined today. There is no shortage of volatility yesterday as Ben Bernanke gave dollar bulls a leg to stand on when he testified before the Joint Economic Committee. The greenback has been mixed since the meeting, and traders are now trying to figure out how far out of reach a Fed rate hike may be. It was only a week ago that traders saw 2 or 3 cuts by the end of the year. With yesterday's comments not supportive of such views, some of the recent dollar weakness may be deemed unwarranted. As for today's economic releases, both numbers beat expectations, something we're not used to. The final reading of fourth quarter GDP was revised upward to 2.5%, while economists were expecting no change from the prior estimate of 2.2%. Weekly jobless claims were posted simultaneously and also came in a bit better than expected, dropping to 308,000. Technically speaking, the short-term picture has become very choppy this week and last. Many pairs have been trading in tight ranges for 5 to 10 days, while volatility remains rather high. Of course, given the long-term bearish dollar trend that is still intact on most pairs, we have simplified our game plan as follows. We're more than happy to short the U.S. dollar in both actively and slightly long-term. Of course, long-term trades will need to be established on retracements as some trends are a little long in the tooth. As for buying the greenback, we're currently not interested in more active trades during high volume hours. As we enter the final 24 hours of the trading for the week, we are ready for anything. There's still a good number of important releases due in each of the sessions, beginning with New Zealand's GDP tonight. Japan will follow hours later with CPI and industrial production numbers. German retail sales will kick off European trading, followed by confidence numbers from the Eurozone and the UK. Finally, U.S. personal consumption expenditures could really get things moving tomorrow, as it remains the Fed's preferred measure of inflation. Until next time, this has been Daryl Richburg with your